Mr. Adi Godrej, Chairman of the Godrej Group. Mr. Godrej, always a delight to have you back on ET Now. Thank you for joining us. Let's first start with the big picture,
Good morning.
Mr. Godrej. 2011 or the current year has been a tough year for FMCG companies. Margins have come under pressure, commodity prices have been high, and supply chain has come under intense pressure. Do you think come 2012, given the way commodity prices have moved off late, it could be a better year for FMCG sector?
Well, first of all, 2011 has not been a bad year at all for the FMCG sector. FMCG growth has been good in 2011. If you see, most FMCG stocks have done well during the year. Results have been good. Growth has been good. Consumer confidence is reasonably good. But I do think, I agree with you that 2012 might be even a better year, because commodity price increases, which was one of the problems in 2011, might not take place in 2012. With the European economy slowing down, I expect commodity price increases may not be much in 2012.
Morning, Mr. Godrej. Avan joining into the discussion. With respect to some of the companies having increased their prices in the recent past, would you believe that pricing power is back in the industry?
Well, pricing power has always been there. Whenever there have been cost increases, the FMCG sector has increased prices. I think the consumers also realize that costs are going up. Consumer wages, salaries have also been going up. So I think that has been accepted in the past, and it was accepted in 2011 too.
Mr. Godrej, I'm using the word if here. If commodity prices they correct substantially in the coming year, which is 2012, will you slash down your MRPs, or in the FMCG sector, once MRP they go up, they never come down?
Yes, what you say is right, because once MRP is up, it is difficult to bring it down, because if you bring the MRP down, then you have to discount all the stocks in the market, wholesalers, retailers, etc. So what usually happens is when costs start coming down, companies start spending more on advertising, promotions, maybe one free with two, one free with three, etc. Bringing down MRP does take place sometimes, but it's a very difficult thing to do, because you have to discount all the stock in the market.
So, can I safely assume that if commodity prices they come down, your margins will expand exponentially, because you will be able to protect your MRPs? Yes, your advertising will go up, but the fact that commodity prices will come down, you will be able to, really save a lot because of margin expansion.
Well, margins do go up when commodity prices go down back to the normal levels. In a year like 2011, as you have seen, margins have declined because of the high commodity costs. So if the commodity costs do come down, margins go back to normal levels. This happened last time in 2010, where commodity costs had come down. Margins had improved in 2010.
Mr. Godrej, you garner close to 35% of your revenues from overseas. Given the way the global situation is panning out now, if you could just tell us about the growth prospects for this going into 2012.
So the growth prospects in our overseas business is very good, because we are mainly in the developing countries, where growth continues to be good. Our major businesses are in Indonesia, in Africa, and in South America, where growth continues to be good. Our growth rate overseas is more or less in line with our Indian growth rate. In the first half of this financial year, we grew at about 23-24% in India. Of course, our overseas business grew even faster because of some acquisitions.
Mr. Godrej, for a group which is present in multiple businesses, you have ownership of multiple brands. Let me ask you some, big picture questions. At the group level, what is your assumption for the dollar? What is your assumption for interest rates, and what is your assumption for the bank rate for the year 2012?
Well, I think the interest rates will keep coming down in the calendar year 2012. I think clearly inflation has come down. RBI needs to ensure that the economy picks up. So I expect interest rates to come down. As far as the rupee dollar is concerned, I am not sure. We are planning that the rupee will remain at around the 52 level. We think the RBI should keep intervening if the rupee depreciates, because it's very damaging to the Indian economy. It will bring in inflation, and I don't think the rupee should be allowed to depreciate much. And intervention is required by the government and the RBI. Policies can also be changed to ensure that the rupee doesn't. The rupee has been the weakest major currency in the world now for a couple of years. Even when the rupee was at around 45 or 46 to the dollar, it was much weaker than other currencies. I would say, what was the other question you asked besides interest rates and the rupee?
Right, bank rates, essentially, the cost at which you would be borrowing, at cost at which you think...
So I think interest rates will keep coming down. I think interest rates will keep coming down. They should come down. That will promote growth.
If you split your various businesses into, let's say, 2 or 3 large brackets, FMCG, non-FMCG and real estate, which business currently is experiencing a boom and which particular business vertical is experiencing a stress?
All our businesses are growing well. So this year, if you take the group as a whole, our top line growth has been around 30%. In FMCG, we've grown around 25-27%. Our property business, despite the sector not doing well, grew 80% in sales in the top line in the first half of the year. Our agri businesses have grown very well. Chemicals business have grown well. So all our businesses have grown very well this year, despite the general stress situation in the economy.
And could you also walk us through any acquisitions that you're planning, whether it's domestically as well as globally, given the way the rupee has also been behaving? Is that going to impact it in any way?
Well, we've announced a major acquisition we did in Africa called the Darling Group, which is in hair care. It's a major hair care business in Africa. It has manufacturing operations in 14 sub-Saharan African countries. We will acquire it in 3 stages. The first stage has been completed in September of this year. The second stage will be in September 2012, and the third stage will be in September 2013. So it will be acquired in 3 stages. We are looking at other acquisitions, but I can't talk about acquisitions until they are completed.
Mr. Godrej, now let me start splitting your businesses into key verticals. Let's start with FMCG. For the year 2011, what should we expect from your FMCG business? More innovation, more product launches, or the focus right now for next 6 months will be about cost management, will be about, margin management?
We are always on to cost management. So cost management is not something we do in spurts. We are always looking to keep our costs down, and other things being equal, we keep bringing our costs down. Of course, if commodity prices rise a lot, then that overcomes the cost reductions we bring in overheads and operating costs. So cost containment is a constant procedure. As far as innovations go, we are looking to several innovations. As you may know, we had a joint venture with the Sara Lee Corporation where they had licensed several products to us. As they have sold those businesses to other multinationals, those licenses are being withdrawn. Of course, Godrej Consumer Products is being compensated for the value of the business in India, so we may enter some of those categories on our own. We have no non-compete clauses on that. Also, all our innovative products are being launched. A lot of emphasis on R&D, a lot of emphasis on new products, especially at the bottom of the pyramid.
In terms of capital market activity, should we expect anything in the year 2012 from the Godrej Group? One would be you could be diluting your stake in Godrej Properties. Apart from that, anything else where you could be raising money?
Well, you see, the stock exchanges, SEBI has brought a regulation where promoter holding is beyond 75%. It is supposed to be diluted by the middle of 2013. So in 2 companies, Godrej Industries and Godrej Properties, our promoter holding in Godrej Industries, it's about 80%. In Godrej Properties, it's about 83%. In Godrej Properties, we're expanding so rapidly that we will require further funds for expansion. So yes, we will raise funds. This will be new equity issued by the company. We won't dilute our stake by selling the promoter holding in the companies. We will raise new capital, so probably Godrej Properties first and then Godrej Industries.
But given the way how Indian economy has moved and the fact that the global outlook for Indian economy currently is going through a process of derating, are you revisiting your 10 by 10 plan, or that 10 by 10 is still intact?
No, the 10 by 10 is very much intact. In fact, this year the growth rate, 10 by 10 means a compounded annual growth rate of 27%. We will exceed that in this financial year.
And finally, Mr. Godrej, any price hikes on the anvil given the input costs as well as the new packaging norms?
Well, it's difficult to tell because, price hikes are taken by brand managers on their brands. It's not even category-wise. And brand managers decided depending on the market condition, depending upon their cost, depending upon their bottom line. So I would say that something or the other price changes are always going on. It's difficult to tell. But yes, I expect since cost increases continue, petroleum prices are still high, I expect there will be price hikes over the next 3 to 6 months.
And just to wrap it up from my side, Mr. Godrej, is there anything which is giving you sleepless nights, apart from late night movies?
Well, not really sleepless nights, but I must say that I think if our political fraternity were to get together to ensure that the economic agenda is taken forward, it would be extremely useful. For example, we need a strong stimulus to the economy. The goods and services tax could provide that stimulus. Almost immediately it is enacted. I do hope the political fraternity will get together to see that important legislation such as the goods and services tax and of course many others are put through in the near future.